3-minute trader tip, the challenge in assessing market risk. Overall market risk should be a key factor in determining trader behavior, and yet is often neglected by most traders. So it's worth asking the question, why is market risk assessment so important? And level of risk is not only a key determinant in whether an idea is worthy of a trade entry in a specific direction, long or short, but if we look at market risk overall, it may influence decisions about overall market exposure. So how many positions should we have open at any one time? Which instruments are perhaps a good place to place our money right now, including historical volatility, the degree of correlation in FX, sector commodity types. All of these things we can start to make decisions on if we've made an overall judgment of risk. It may dictate our time frames that we trade. For example, in highly volatile markets, it may be prudent perhaps to trade shorter time frames than longer. It may determine our accumulation approaches in terms of whether we actually accumulate into profitable positions or don't. It may influence exit and reduction approaches, of course reducing positions in light of increased market risk. Number of positions open we've already referenced indirectly. Again, perhaps if we have some element of risk assessment, we can say, right, in this specific set of market circumstances, the number of positions I'm going to have open maximum is this. However, if in this particular set of market circumstances, which is more risky, I may reduce it to this. Another approach to manage changes in market risk is to look at how we position size. For example, we may suggest in a high risk market, then we position size half our normal position sizing we use. So for example, if we are risking 1% of our account on any trade, we may reduce that to 0.5% in high risk situations. And these are all potentially applicable whether discretionary trading or whether using an EA approach, because many of these things can be actually programmed into any EA as well as when trading on a discretionary basis. However, the key challenge is to come up with an objective system and link this to specific trading actions. For example, in market situation A, I'm going to do 1, 2, and 3. In B, I'm going to do 4, 5, and 6. So that is your challenge from here. If you agree that market risk is important and can have influence on all of these to help you manage the peaks and troughs of market risk, then surely this is worth investing some time in. Trade safe, and we'll see you again soon. Bye-bye for now.